Hello traders. So today we're going to be looking at the only two ways that the market turns. So in this video, I'm going to be discussing two entry strategies using the ICT concepts. So actually, I'm going to outline the only two ways looking at any pair, looking at any time frame that the market turns. So keep watching to find out how. So I'm going to begin with the sell side. So sell side, this is the first strategy actually. So in this first strategy, I'm going to be looking at the sell side and then the buy side. So in the sell side, we are looking at the market that had been going higher initially. So we had a higher time frame order block or fair value gap here. It could also be a liquidity on the, let's say the daily liquidity. It could be an all daily high that had been taken out. So when the market was coming up, it falls short of that high or order block or fair value gap, and then it starts dropping initially, but this drop is usually a fake move, and then we see now the market now comes and runs that high, hitting that high time frame, either order block or fair value gap, or even a liquidity area. So it could be a buy side liquidity that has been taken out on the daily chart, and then you see now this framework forming on, let's say, the 15 minutes. I like using the 15 minutes because it's clearer. I just like it. It's simpler to see this structure compared to, let's say, the 1 hour, but sometimes you can find it in the 1 hour. So when the market now has hit that higher time frame order block or fair value gap, we see that the market now dropped. So this aggressive drop, this run here from that higher time frame order block or fair value gap, this is what we're looking for, guys. So when you see this and then it leaves an imbalance, then breaks market structure during a kill zone. So if you do not know what a kill zone is, we have sessions in the market that we will be focusing on. Typically it's the New York time that we focus on. So if you do not know about sessions and the time zones we are talking about in this concept, you can go and check out Michael's videos. He really goes in depth into explaining what these sessions are and what the exact times they are. But if I can recap, it's, for instance, the London session, we could be looking at between 2 a.m. New York time. So when I say New York time, I mean UTC, and 5 a.m. New York time. So you also have the New York session, which is between 8 a.m. to 11 a.m. So those are the times you're going to be focusing on, guys. So once you see this framework forming, so once you see that impulsive move away from that level, and then you have the fair value gap forming, you want now not entering below the market, you want the market to come back to you, and you want this market to come back into premium. So it could be a premium fair value gap like this one, or even an order block. Sometimes it could use an order block, so you're not restricted to the fair value gap only, but you want to see it revisit this area that it broke structure and retest those key levels such as the fair value gap or the order block, and then that's where when you take your entry, and then your stop loss comes above this high. So from there, once you enter, you target sell side liquidity. So this is the first sell side, and you could also be having other sell side in this zone here on the left side of your chart. So once that level is hit, you want to be focusing on the liquidity on the left side of the chart as your targets. So on the buy side, we look at maybe we have a higher time frame order block of a value gap below the market that has been hit, but initially it comes down, falls short. That's very key in this strategy. It falls short, then starts to move away without hitting that higher time frame order block of a value gap. So when I say higher time frame, what I mean is, for instance, for my analysis, I usually focus on day trading. So my higher time frame is usually the daily chart. So as a day trader, I focus on the daily chart as my higher time frame. So I'll be looking at another block, maybe on the daily, or if I will look on the daily chart that has been hit, and then you get such a response, break structure, leaves an imbalance during these two sessions, either of the two sessions, either London or New York. So I like starting with the London because I can actually, London tends to form most of the time the low of the day. So this low could be formed during London, and then the markets now starts running away from that level, then retests this and continues higher. So New York at a later time It could just be used to retrace and then continue high into more buy side. So that's why I like the London session, but also the New York produces very good setups when the narrative is on your side. So on entry, you just take the entry at that level that it broke structure, coupled with a fair value gap or another block, and then your stop loss comes below this low. So actually, guys, that's how you trade this strategy, and we are going to be looking at some real life examples in the charts. So before we even look at examples, let's look at the second entry strategy. It is almost similar to this, but slightly different. So keep watching to just look at so that you can look at this strategy. So the second strategy is you get a higher time frame order block or fair value gap. So instead of the market now falling short, you get that the market goes directly and hits that order block or fair value gap. So once it hits that order block or fair value gap, you see that the market now starts dropping aggressively, then attempts to take that high out but fails. So this is typically what we call a failure swing. So it fails because we see that it breaks market structure without taking out that high. So this high is not taken out, but market structure is broken. So market structure, once it's broken, it indicates that this market now wants to run for sell side liquidity. So once it breaks this market structure, leaves an imbalance, so that is your signal now to hunt for selling opportunities. So the market goes back up into that fair value gap or even another block. That's when you take your entry. Once you take that entry, you want to be targeting for sell side liquidity. So this is the first target, and then you could be having another level of liquidity on this left side of the chart. So that is your entry, and then your stop loss comes above this high. So you're not placing your stop above here anymore because you don't want this high to be taken out, because the market has already broken market structure. So you don't want it to go back up to take out that high. You want it to just remain below and run for that sell side, because this is the confirmation that we need, plus this impulsive move that now the market is now willing to run for sell side. So again, focus on the time, guys. The time is the most crucial aspect of these strategies. So if you don't focus on the time, you will get it wrong. So on the left side, we have the buy side. So we're looking at the same thing. We have the market hitting this higher time frame order block of fair value gap, and then it breaks market structure, then leaves an imbalance. So this impulsive move is all you need to see for your confirmation. So once it's broken, this market structure shift, and then the imbalance, you want the market to come back slowly and retest it. That's when you take your entry, then target for buy side liquidity during a kill zone. So this is where your entry comes in and your stop loss right there. So guys, those are the two strategies that I wanted to show you. So let's dive into real life examples that occurred recently. So we are looking at an example. This is the first example that we're looking at. So in this example, this is around December 29th. So in this example, what you're seeing, we had an imbalance. So I did not outline here, but we had a daily imbalance that was hit inside here. And then we created this framework from beginning from here. And then it came back to retest. Then created another framework. So during this kill zone, which is the London session, we are seeing that the market created this framework, took out this liquidity, then broke market structure here. Then this is the retest I was talking about. So at around 3:45 a.m. New York time, that is your entry. So that was your entry. Then you target this liquidity. But the market did not just go directly for the liquidity. You see that the market came back at some initial, it reached into a high, into some high, maybe some premium level. You can even say maybe this imbalance and the order block. Then from there, actually I can outline that so that you can see. I'm going to outline this order block. You can see how it dug into that order block and even into the imbalance. Filled that imbalance, and that's when the market now dropped to retrace. This is around 5:45. It hit this order block, then continued higher into that target. So we are seeing that at around 12:45, the target was hit. So I like to exit my positions before 1300 p.m. New York time, because that is when I should be, or if as a day trader, I want to be taking profits. So anything, if the targets are not hit by that time, I'm out. So I'm done. So if that's why you should respect the time, because once the time that you're allocating maybe to be in the market has expired and your targets are not hit, then you can exit and wait for the next day. So that's what I do. And looking at this example, you see that it's about 17 pips when you consider this low as the stop loss. Then it ran for that high, so it's about 50 pips. So 50 pips was achievable. So actually I like to target between 40 to 50 pips. Some days you can, actually this was a day that it was during December, so the volume was a bit low, but there are days that the market can even run 80, 100 pips. So those are actually normal volatility days that we can be hunting for this strategy or this entry pattern. So this is another example. We're seeing that the market had come off this imbalance, and actually the market on this day hit a daily order block. So guys, you can go back to your chart and check that order block. There's a daily order block on this level, which was hit, and then the market now responded. So this imbalance, this is what I'm talking about. This is the kind of response you want to see. So don't chase price in this leg, because this is not the only target we are watching. This is the actual target we'll be watching. So when the market comes up into this high, it's already in a premium. So what will the market do? The market will come back down to test our discount area, which is this level gap, and then run higher into another level of premium. Once it gets into premium, same thing, it comes back into discount, finds this support area, which is the order block on the 15 minutes, this one, and the imbalance, then it accumulates more buying. So it will run for this high again. So that's how the market moves, guys. So in this instance, we are seeing that the reason it came back in during New York was just to take up this sell side liquidity, entered it into this imbalance and hit the order block, then accumulate for more buys. So the market actually doesn't move without liquidity. That's what you should learn. So even this move to retrace had to take out liquidity before dropping lower. This move had to take out this liquidity before dropping lower. So we are seeing this one dropped to rebalance. So there are only two ways that the market can move, which I've already taught. If you have not watched my video, you can go back and watch my video on how the forex market moves. So I outlined that the forex market moves only to rebalance and to take out liquidity. So that's where you are seeing every move in the market. Before it begins, there's a liquidity level that has been taken out, or there's an imbalance that has been rebalanced. That's it, guys. So those are the two examples that I've outlined concerning. So we are seeing actually this entry came at 30 a.m. New York time, and this one was at 4:30 a.m. New York time. So those are the kill zones that I was talking about, guys. So actually, if you look at this divider is actually 00 New York time, which is midnight open during New York. So I use this indicator to indicate for me the separation between the New York times. It's called week and day separator. You can find it and maybe use it for your own purposes. So guys, so this is what I use to divide my days during. Actually, I'm dividing based on New York time. So let's look at an example of the second strategy. So actually, this example, in this day, the market actually created two of these strategies. So we are seeing the London session. This is 2:30 a.m. New York time, and the New York session. So in this example, actually the market had hit a daily. You can go and check out which daily. I think it was an order block or a fair value gap, which was hit, and then the market now started running away from it. So our confirmation, just like I've taught, our confirmation comes in when this market takes out this high. So in this scenario, the market started rallying, came back down, attempted to take out this low, but did not even get there, found an imbalance here, reacted off that imbalance. So these two candles were the confirmation that now this market wants to come for this buy side. That is it, guys. That is how you day trade using these strategies. And it works in every single pair. Search any pair, just follow the steps that I've outlined. Search any pair, look at it. How does the market turn? It is either using this strategy or the previous strategy that I've shown you. So guys, it doesn't matter the time frame, as long as you are framing from a higher time frame. So a higher time frame could be depending on your trading style. Let's say, for example, you're a scalper. Your higher time frame could be anything, maybe from the 1 hour, 15 minutes. We could consider those your higher time frames. And then you're scalping in the 1 minute or 5 minutes. So guys, it works in every pair, it works in every time frame. It doesn't matter your trading style. This strategy works. So, and in this example, you're seeing that once it confirmed break in structure here, it came back to retest another block. So it didn't have an imbalance in this scenario, but we had another block here. So you want to be placing your entry there and your stop right here. So this is the stop I outlined here. It's around that region. It was about 10 pips, and you're targeting this high. So even without targeting that high, we see that the market ran almost taking out the high but took out these bodies. So this is the bodies I was outlining here. It's about 42 pips. That's already 4R. So who doesn't like that? That is 4R already, and you have not even hit your targets. So if you consider the entire move, the market came back down to seek for more discount. Just came down to seek discount. Look at this aggressive move. This move actually, it shows a lot of traders that this market is turning, but in real sense, this market already turned from this level and from this level on previous days. So this is just a retracement coming back to that order block. Once it hits that order block, it creates another framework. So actually, once it took out this high right there, this candle, that's your entry right there. So you enter there, you target this liquidity and this one, and you're done. That is your setup. That is your entire day's setup, guys. It is as simple as that. Actually, this is what I use in my trading. These are the only two entry strategies that I use, and I'll recommend that you check it out. Go back test, just do a lot of back testing and see how it works for you. So if it works out for you, it doesn't matter which format or which model you might be using if you're studying ICT concepts, but you can add this into your basket of entry strategies. But I really like this too because they're the only things I need to be focusing on when I'm considering an entry. So if I'm given two options, then my trading becomes simple. So guys, thank you so much for watching. I'll see you in the next one. Thank you so much guys for watching. I hope this video has been helpful. If you enjoyed this video, don't forget to like, subscribe and comment. Also let me know what kind of content you wanna see or any suggestions you have. Thank you.